how do I actually decide between a high yield savings account, a Roth IRA, and a brokerage account? Okay, so a high yield savings account might give you a 3 to 4% um, average percentage yield. Is that what APY? 3 to 4% interest on the money that you have. That's pretty good, right? Like I have a emergency savings account, and that emergency savings account is a high yield savings account. So I'm never going to touch that money. Why not let it appreciate 3 to 5%? But if I feel like I'm going to touch that money, it might just be in a regular Chase account. Now, a Roth IRA and a brokerage account, low key is it. It is the same thing. The Roth IRA is that for 60 years you should not take out of this because you're going to be. It's all this profits is going to be untaxed, practically. It's an untaxed account, but you cannot take out until you're 60, or you're going to be taxed on it. In a regular IRA, you might be taxed on whatever, however your tax is set up, but you might be taxed on whatever single transaction or by the quarter or whatever. But that's how the differences are. Is that a Roth IRA, you pay no taxes up until 60, but you're not touching it. So you might max it out after 6K, like 6K a year. I think you have the ability to max it out each year. So you should be maxing that out first if you have the ability to, and then move into your brokerage account, your IRA. High yield savings account for me is just money that it's emergency money that you need to have liquid just in case. Liquid is you need to have on hand. You can send it to something just in case. With stocks, it might be Friday, so you might sell your stuff, but you might not be able to get your money out of your account until Tuesday or Monday. You see what I'm saying? So it's not as liquid, and that's the only kind of like dance that you need to have between those. Now, personally, I am young. This is not financial advice. I am young. I'm going to be aggressive with my investments. That's my bottom line. I'm going to be aggressive with my investments. Why? Because if this money burns, God forbid, it's not like I'm missing it too much. And a lot of Gen Z have to realize that, like, yeah, I know we struggling at times. Don't get me wrong, we struggling at times, but we also enjoying ourselves. So if you can rein in a little bit of that enjoyment and use that for your investments and see how you could, I'm not telling y'all to go into no mutual fund, man. Like, if you're a Gen Z and in a mutual fund, what are we doing? What are we doing? God forbid. Let me not say that. That's not good advice. You could be in a mutual fund, of course. It's just spread out, and it's just less risk, but it's less return. If you're young, you want high return, and you could risk it a little bit more because that money, although it may feel like you need it, you probably don't because you have another 15, 20 years of earning potential. And then you have another 30 years on top of that of earning potential. You see what I'm saying? So in the grand scheme of things, is that money going to matter? Probably not. Which is why when I was in college, that money was nothing. That money was nothing because that earning potential is still high when you get out. I can still try to go make $1 after the fact, but that $300 that might have been sitting in my account, that might have been spent on food, was just thrown off into my investment account. And now I'm able to be a little more aggressive because I would have spent that $300 on food. You see what I'm saying? So deciding between a high yield savings account, a Roth IRA, or a brokerage account, a Roth IRA, I say max that out if you can because untaxed money, and that's just saving up for your retirement. An IRA, you might want to be a little more aggressive. I play my options within it. And that IRA is a regular brokerage account that you could trade stocks on, a bank account for stocks. And a high yield savings account is for money that you need to have liquid just in case, an emergency savings account. You're going to collect 3 to 4% interest on it, and it's going to do pretty well. But it's not going to look at all similar to your brokerage account or your Roth IRA account because you might be making, let's say, 60% on your money for the year in that brokerage account and maybe 30% in the Roth IRA. So 3% to 30% to 40%. And for, let's say, for my example, if my IRA, I think I'm hitting like 80%. I hit 80% last year. So 80% to 30% in the Roth IRA to 3% in the high yield savings account. It's just how you want to divvy those up. It's personal to you. It's not financial advice. Okay. One more question. I like this. Let's see. if rate cuts are coming, this is a good question for my investors out there. If rate cuts are coming, should I lock in long-term investments now or wait for the market dip? Great question. Now, it's not financial advice. Personally, I always wait for a market dip. I will always wait for a market dip. And this is my philosophy when it comes to just trades, et cetera, and prices, is that I trust that this stock will get to my price or will come back to whatever my price is, my stock price, versus it hitting my stop loss, me having a stop loss, it snacking that stop loss, and now I'm out or whatever. That's for trading specifically. But overall, I'm saying that you think that stock goes up so much, you think that stock goes down so much, that stock will return to that middle more than not. And what I do know in the markets is that there will be down months, there will be down days, and you will have opportunities to get in. But if you're impatient, that's when they strike. That's when the market gets you. That's when they look for you. Is because you're being impatient. You might buy in a little bit too early, or might be too late, and right then, that's when they smack you out. That's when the market gets you because you weren't being patient enough. Let's say you said you wanted to wait for a 20% dip in the video before you got in. Or that might be a lot. A 10% dip in the video, 5% dip in the video before you got in. Now, granted, it might take you a couple months, and especially if you're in a bull run. But I really do believe that it will still get down, even despite rate cuts are coming. I mean, the way that the market prices stuff in is 6 months ahead anyway. Right? So rate cuts were already priced in months ago. And yes, that the rates are coming down. If anybody does not know, I think I explained this last episode, but I'll do it again. Fed funds or rates is just how much it costs for banks to lend out, how much it costs for people to borrow money, right? If interest rates come down, it's cheaper for people to buy. Wow. If interest rates come down and it's cheaper for people to borrow money, then more money is in circulation. More people are buying, more corporations are buying. They might be hiring more people, et cetera, et cetera. You see what happens. So the idea is that the economy is going to spur. Does not necessarily mean that the market is going to run. Yes, companies might free up a little more cash flow. They might be able to buy more and invest more into R&D, et cetera. Doesn't mean that these companies are going to yield those results instantly. And it also doesn't mean that all the other economic factors that are kicking in at the same time doesn't push into market sentiment, right? Economic factors being, labor market down, or inflation still going up, or inflation above 2%, right? Like, these are economic factors that still might be keeping people away from the market. So it doesn't mean that your investments are going to skyrocket. It does not mean that. So be careful. I wait for dips every single time. That's my personal assessment. Okay. Well, that's my little market update. I mean, other than that, I told you about, Warner Bros. Did I tell you about, Warner Bros. Being bought up by Netflix, Paramount, Skydance, etc.? But I don't know if y'all care about that. But basically, legacy media continuously, dying. And it's showcasing that within their studios, showcasing that within their ratings and stuff like that. But streaming obviously is continuously taking over. Paramount has their Paramount Plus. Netflix has Netflix, of course. And Warner, I believe, was HBO. But Max is just not doing enough. It's not. So they're going to have to sell, and they're looking to sell by Christmas time. And these companies that I listed are looking to buy. So very interesting time. This is right after the Skydance deal that Skydance bought Paramount, $6 billion, Larry Ellison. And this is just more of consolidation within the space. Because if Skydance and Paramount buys Warner Bros. And all the studios and all that stuff, seems like a lot of consolidation of our media, which means that there's only a couple of 3, 4 people, 5 people that's controlling what everybody sees on their screen. And that's why we have Gen Z media right here to, giving y'all the real. Okay. With that, I gotta go. I have an alumni dinner to get to. I hope y'all weeks have been good. This was a great episode. Put your comments down in the comments below. Questions, concerns, maybe some takes. You think I'm off about something? put it out in the comments. But I'll be doing a lot of this research, man. I'll be really researching this. So check out the resources in the description to go read a little bit more to see if I missed anything. Of course, I'm human. With that, though, I love y'all. Gen Z, perspective. Oh, I didn't even say shout out perspective. Listen, Instagram, TikTok, YouTube, LinkedIn, we're everywhere. Shout out perspective. Go check us out. We talk about real world topics, making real world dense topics more accessible, more understandable, breaking it down into layman's terms. Some of the stuff is really not that hard to get. They just make it hard to understand by the language that they're using. And what I'm trying to do and what perspective is trying to do is just lower that language, because sometimes it's just inaccessible. And we trying to give y'all the real message. So you can make your own perspective. Hold on. Be perceptive to what? Build perspective. With that, I love y'all. Gen Z, what's up? Sadiq, I'm out, man. Catch my links in the description.